Vijlder, CIO and Strategy and Partners at BNP Paribas Investment Partners. William, hi, morning. What's expected from the timeline on tapering now, and do you think 2014 as well could be a moving target?
Well, it should happen somewhere in the early part of 2014. For the remainder of this year, it is highly unlikely for two reasons. The first reason is that the discussion on the debt ceiling has, as we know, led to a shutdown in the government, and that has delayed the release of data. That means that we need all these data to be released to have a clearer picture of what the economy is doing. Secondly, the shutdown and the debt ceiling discussion has created a lot of uncertainty, and it has had an impact on consumption, on capital expenditures from corporates and so on. So it has a short-term negative impact on growth. If we then say, well, why not start to taper in December? Well, in December, the central bank, one would expect, would already look at the budget discussions that have to come to fruition by mid-January, and on the new debt ceiling discussions that have to come to an agreement by the 7th of February. So again, that makes December rather unlikely, and that would mean that we would have to expect something around March.
William, will it be risk on emerging markets again as flows are making a comeback to emerging markets, as everyone on the street is convinced that tapering will be delayed?
Well, indeed, it is a factor that plays a role, that investors are saying, considering that we will have no tapering until a couple of months, before a couple of months, where can I seize the opportunity? And one way of seizing the opportunity is to be exposed to these markets that have suffered actually quite a bit earlier on in the year from the prospect of tapering is about to start. So that could be a reason. I think more generally what you will see is that risky assets and that specifically then equities will be underpinned, also because you do have the cyclical improvement in the developed economies, and China is also doing a bit better. So that is an environment which is leading investors to favor risky assets, and then on top of that, the fact that you will not have tapering for several months is an additional factor, of course. This picture will then change again as you get closer to the tapering in March, because then you will have the uncertainties creeping back in.
William, what's the view then on India? Because it has underperformed the most in dollar terms. Is it time to buy the Indian rupee and the Indian equities?
If there has been this big currency weakening, this is a longer-term buying opportunity. And although there's a lot to be said in favor of that argument, one needs to keep his feet on the ground. And short-term, and that is for, say, the coming 12 months, you still have a lot of questions that need to be asked. One question is how fast will the economy grow? In our view, economic growth next year will only be something like 4%. But at the same time, you have to say what's happening to inflation. And there, Indian inflation is close to 10%, something like 9.7%. So that means that from a central bank perspective, you need to tighten policy. And if you have this potential policy conflict or conflicting objectives, on the one hand, you want to have an easy policy because of growth, you want to have a tight policy because of inflation. This is not inspiring a lot of confidence to investors. At the same time, any progress on the current account deficit, meaning narrowing of the current account deficit, also on the back of measures to curtail gold imports, would be very much welcomed. And then another element which plays a role is, of course, that we're going into elections next year. So this, I think, will also keep investors on the sidelines. So from a longer-term perspective, currency has become pretty attractive, but that does not mean that then all of a sudden money will start to pile in because of the elements I've just covered.
So what do you expect on interest rates in India and balance between growth and inflation?
Well, there is this policy dilemma. Growth is slowing, inflation is too high. And if you do not do anything about it, what's going to happen is that eventually the currency will suffer from that, because markets, being very cognizant of the fact that the central bank is faced with this dilemma, if they would see that the central bank is not coming up with any clear conclusion on what direction to take, they will not like it and they would sell the currency. It's for that reason that inflation need to be brought under control. And that is where markets are looking with a looking glass at how different countries are doing. A couple of weeks ago, for instance, we had an inflation data release in Indonesia, which came in far better than expected, meaning below expectations, and market welcomed that a lot. Is these type of things that you have to keep in the back of your mind when you're looking at India. CPI inflation is close to 10%. Wholesale price inflation is low. By the way, this type of setup is bad for corporate profit margins, of course, but you need to bring back CPI to lower levels, and that means that in our view there will be some tightening of monetary policy. That tightening will be welcomed by international investors because they will look at it as an effort from the central bank to maintain its credibility and to build its credibility, and that is something that in the medium run would be positive for the currency, although in the short run it could weigh on the stock market.
So what's your investment strategy for emerging markets over 2014?
I think at this moment the markets that we like and really from a valuation perspective are countries like China, Russia, but also to some extent Brazil because of its exposure to the Chinese cyclical environment. I think in India, the market, what you have to track there very closely and what foreign investors are tracking is how much will the prospect of slower growth have an impact on earnings forecast. Earnings forecast, they used to be to the tune of 10% growth for next year. That has now been revised down to 5%. What's going to happen to inflation? If that is going down, that will be welcomed big time by foreign investors. And then what about political uncertainty? And if political uncertainty would kind of reach a peak in the run-up to the elections, that would then be an attractive entry point for international investors in the market, provided that in the meantime we would have seen a reduction in the current account deficit and we would have seen a decline in inflation.
Right, William, appreciate your time and thank you for joining us.